They're now lowering their guidance on comp store growth for the third quarter. They're anticipating 1% global comps. This had been 3% projections for Q3. They're also announcing that they're closing 150 underperforming stores in densely penetrated areas in markets in fiscal year 2019. This is up from 50 annually, so they're tripling that number. They're also announcing that they are going to be returning approximately $25 billion in cash to shareholders in the form of buybacks and dividends through fiscal year 2020. They're also upping their dividend to 36 cents per share payable on August 24th, 2018. And they're also announcing that they're planning to partner with an external consultant in order to drive speed and leverage their best practices in identifying areas of opportunity. Kevin Johnson and Scott Maw, their CFO and their CEO, are going to be presenting at the Oppenheimer conference in Boston this afternoon. So they just released all of this information. We are still going through it, but really the big takeaways here: they've lowered their comp growth projections for Q3 2018, and also announcing that they're going to be closing 150 underperforming stores in their densely penetrated markets in fiscal year 2019. As you can see, the stock is down around 3% right now. We'll bring you any other headlines as we continue to go through this. Kelly, back over to you.
And Kate, you said a pretty big, they're doing some buybacks, a pretty big number there too, some capital return.
Yes, that's right, $25 billion in cash to shareholders via buybacks and dividends through 2020.
Okay, Kate, thank you very much. Kate Rogers there. The shares are down more than 3% on this news. And don't miss an exclusive interview with Starbucks CEO Kevin Johnson at 9 a.m. tomorrow on Squawk on the Street. Mike, listen, I mean, you could say that the investors would go, oh, great, you're not going to open as many stores, you're returning cash, we love this, and why are the shares down 3%?
It's an acknowledgement that they could not get comp sales going again on the current store base. So it essentially kind of plays into, it's a concession toward some of the abiding fears about the domestic business, the North American business. It said, they're cannibalizing, they're over-penetrated, and also raising the dividend is great, brings you up to a 2.5% yield basically on the current share price. That's another acknowledgement of a maturity of the business. It doesn't mean it's not going to produce results down the road in terms of rationalizing the store base, but I just think it's a nod in the direction of the doubters.
Michael Black, that's exactly what you were saying a moment ago, where these are companies who had said, okay, well, at least we can grow in China. Now there's some clouds over that, but it's amazing. They're saying the U.S., the third quarter comps would only be up 1%. 1% for Starbucks. Not that it hasn't happened before, but investors have been waiting for them to say, look, tell us if you think 3, 4, or 5 is achievable anymore or not.
It's amazing. They're actually saying, wow, there's too many Starbucks. I never would have thought that. In any event, I think what's interesting here is this. In the last Beige Book, we learned that consumer companies in general, retailers, are actually having a better time since recent months in actually being able to dictate price. Now, trust me, Starbucks dictates price. You want that cup of coffee, you're going to pay what they're asking you to pay. Yeah. To me, this is a rationalization of the business, saying, you know what, maybe we need to cut this down. Maybe we need to, there's going to be some short-term pain here. We're going to retrench. We're going to return money to shareholders. Retail stocks have been getting a pass, and I think a lot of it is because they've been dictating price. I think Starbucks plays into that story well. It's interesting. Let's see where it goes. It's not saying, oh, this is enough of a dip to say this is exciting. It's not. But I think they're heading in the right direction. It shows a little, dare I say, bravery on their part to make that admission and focus on what they're good at.
Lamar, have we got too many Starbucks?
Do we have too many Starbucks? I would say we have infinitely too many Starbucks. At least, though,
you're not even Midtown.
Well, at least here in New Orleans, we've got a lot of good local chains that give them a good run for their money. I think that's probably where they're struggling, is where they're seeing some good competition.
Yeah, no, I wonder about that as well. A lot of the new kind of specialty startup shops, and they've been trying to do the roastery.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.